Whoa, good morning, good afternoon, good evening, wherever you are in the world today. I hope you're absolutely fantastic. I've been out of the public eye for a long period of time with stints coming in and out, and I realized that it's time to get back in front of you so we can trade the markets together. The difference now is that my project has got to a kind of a certain level of okayness to try out on live markets with live trades with real money, which is nerve-wracking for me because this has been my primary focus for the last 3 years, and it's now being taken out of its box and put to work. With that said, I want to be very clear that if you follow any of the signals that come through from this live broadcast, that's completely on you. This is my beta testing the models in live market conditions, hunting or fishing for any potential errors, any potential core functional improvements that I should focus on before moving on with the production. In terms of how you can add value, is perhaps share some of your ideas as to how you'd like the platform to look. I've very much scaled it down to MVP, so that's most viable product. So I've taken away all of the unnecessary noise so we can get to the core of the problem, and that is to make money without the complication of the markets. However, using the markets to make money. So if you don't see the RSI or a volume monitor or the typical things that a lot of the other guys show, it's because I'm not looking to create a platform for traders to use to make money. I'm looking from now on for the AI to be forecasting the future of price action, getting the forecast correct, and then putting that to play on behalf of the trader. All right, so I just want to go to my YouTube channel, have a look for this link. What the hell is this stuff? This is obviously not the one I really use, so okay, there it is. I'm not expecting for big numbers to start with. Just putting it out to my communities. So yeah, we're going to start it small, but just like any progression, the more you exercise something, the better it gets. So if you do have people who are interested in making money in the markets through the AI way, please share and like and subscribe and all that kind of stuff that other people remind you to do every time that you rock up to one of their videos. All right, so the first things first, and what I've got to do now is load up the market profile so that the AI can get to see what's happening on the back end. Let's do that together. This is just a fresh start. And if you see some white in the background, that's because you're going to be seeing what it's like to have live markets, money on the market with consequence. In other words, this is a FTMO challenge, and this is the live market conditions that's connected to their server. Just notice it's not a demo account. Very important to know the difference. This is real money. There's 190,000 here in the balance, and my aim for the next 5 weeks is to get this to 220,000 using AI, and obviously making improvements all along the way. So this is serious business for me. This is not just light-hearted stuff. This is real deal, like real life stuff. And as I run into problems, I'm going to make notes of it, or hopefully you can also give me some advice as to what you'd like to see different. And then I'll get back to the development side of the project and then build on that. So right now, just to surmise what I've just said, it's live market conditions with money that has consequence and beta testing the AI models on the platform I've built without any smoke or mirrors. This is live streaming, so there's no video editing. This is raw. If it goes wrong, it goes wrong in front of you. You get to see the devastation on my face if it goes wrong. Or the win, yeah, because there's also that. Winning is also tons of fun. All right, so the first thing I got to do is get the market structure right. What I'm going to help do that is just to kind of pause the platform. This has mostly been in development, so again, I'm not too phased about it looking nice and pretty and frilly and that kind of stuff. It's more about getting the job done, because ultimately, let me just remind you, I don't really want to have another pretty product. I want something that just gets the job done with the least amount of input required. So for right now, I'm building up the ability to get the process operational, but thereafter it's going to be the focus of automating all the things that I don't necessarily want to do anymore. And one of the things I don't really want to do anymore is to set up the inputs. But again, that's just where the project is right now. However, there are plans towards getting this part sorted out as well, which is, I suppose, one of the reasons why you'll notice that we haven't got all of the usual bells and whistles for the MTOPS setup. There aren't the quadrants up that kind of give us market structure and that kind of stuff. There aren't many tools. I've just got one tool, because I've worked with the strategy for the last 8 years. So all I really need is just one tool, to be honest, to get everything aligned. And that's it. Nice and simple, easy peasy lemon squeezy, as my boy would say. All right, so with that, I'm just going to try get the screen a bit smaller because I've condensed this so we can stream it. I've got a UHD screen, so it's ultra high definition screen, which is like beyond 4K. I don't remember the exact specs, and to stream that amount of data just for something this kind of simple is wasteful. So what I've done is I've gone into an HD screen, which is, I think, is 1280 by 720, and therefore I've had to condense it. And hence I don't get the full luxury of using my full UHD screen, which means I just got to kind of work with the scaling a bit differently. So if you see that I'm playing with the scaling unnecessarily often, that's the main reason. It's because I'm working with a reduced, what they call a container, the screen view area. All right, so I want to pause it there if I haven't already. I think I have, and then I'm going to start putting this together. So what I'm looking for is clear highs and lows. It's pretty simple. Joining them together, I'm going to stop there, and I'm going to input them into this area over here. That's 152, 214, 188, 317, 2 on 1. Oops, sorry. 215 with 2 on 1. 235, 330, 257, 213. All right, so it's not written up here, but this is the Bitcoin 30-second chart. And that's what I'm going to be working with just for the duration of however long. Because once this is all working seamlessly, I can just copy and paste the process with just different models as inputs. So for right now, it's Bitcoin because Bitcoin's clean data, it's 24/7, whereas other models or the other markets are a bit complicated. They have this on-off kind of open bell, closed bell kind of environment. Plug the laptop in. Alrighty. I think now's a good time to put my blue light blocking glasses on. There might be some glare, so I apologize for that. But I don't want my eyes to tire me out. No, these ones are the ones we're going to go with. I've said it many times. You got to invest in yourself, and your body is certainly one of the things to invest in. So my recommendation is get a good pair of blue light blocking glasses. These are super strong. These block out 100% or 99% of blue light. And for these reasons, I can have the glare at my face all day and not necessarily suffer from that artificial blue light stuff that other guys do suffer from in the modern day and age. Yeah, it's going to continue building the market structure. Yeah, again, this is something I will be working on during the year so it becomes even easier. But again, right now, this is what needs to happen so that the market model on the back end gets to see what's happening with the live data. Or the live market conditions, that is. All right, so I've got my first market structure. That's all together. I just wanted to see if this went down or up. If I need to readjust the latest one. Yeah, so it went back up again, which means this does seem like a little bit of a condensed market structure, so I'm not going to be overly excited to open up a trade just yet. Whilst I say that, I think maybe it's best just to reevaluate where the turning points lay down. So that right now, I'm calling on my years of experience. So I know where the highs and the lows form, what looks good, what doesn't look good, and that's just experience. So I can tell if this needs some adjustments, but again, that's just for the time being whilst I have everything set up and configured so that it gets automated and the users don't need to do any of this work themselves eventually. Right now, yes. Later on, no. I would say the worst part, but I say that facetiously because it's so much easier than what I've had to do in the past in terms of when working with TradingView and setting up charts. The worst part of the day is setting up the initial market structure, which takes maybe up to 8 minutes. And then from there, it's just adding the next one at a time. So it's pretty painless in comparison to what other traders go through. I'll see what happened here. So for those who are interested in shapes of trading, here's your double top. You can tell how it goes down. It kind of meets at the same level over there. All right, so let me fill this up. 152. All right, so now the market structure is captured. I'll press this button and then a sequence of domino effects happen on the back end. So what you don't see is a full process pipeline, and believe me, there's a lot to it. And right now, it's quite simple because it's just one button that I press. Was it done already? Let's have a look. See, when that goes green, then it's done. Yep, it's done. That's great. The next is I'll move over to get my forecasts. So now it's processing each AI model, getting the visual output. Okay, now it's green again, so that's ready. And here it is, the visuals. So what I'm looking for now is just which one, given these market conditions, make the most sense. All right, so I'm looking at, well, let me take it a step back. There's 3 models that you'll see. The first one, it's just different architectures or different ways that the brain was designed on the back end. So this is called the mixture of experts. This is then called the Monte Carlo, so it's reinforcement learning. It's just a way that adds randomization. So it's a different style of thinking model. And then this one over here is advanced reasoning. Okay, so this one is saying that we're going to have some consolidation coming up, which kind of makes sense. It does seem a bit slow at the moment. So something to that effect. Model 2 is saying we're going to have something to this effect. So also another form of consolidation, more or less. And then model number 1 is also saying it's going to basically where it is right now, get back into consolidation. So in a way, they all are agreeing that today or right now might not be the best time to trade. So I'm just going to perhaps do that and see which one works the best. And as with the markets, we wait. Oh. Yeah, so today we're going to start off with some Bitcoin. Oh, sorry, with on YouTube. And I think as we progress, we're going to move over to TikTok and some other stuff. I've always been a big fan of YouTube. I think TikTok, I don't know, it promotes a certain level of dopamine stuff, and I think YouTube also is getting there with the YouTube Shorts and things. However, for people like myself, that dopamine addiction is kind of like pendulumed back towards longer form videos, but more chilled style, where it's not necessarily all glitz and glamour like a casino. Whilst I wait, I wanted to be honest, I don't really want to be sit here bored. Well, where I'm at right now is I've been working so hard at this for so long that I don't necessarily think I'm too interested in developing any more right now. I've done what I've needed to do, I think, for the most part. There's always obviously more to do, but for right now, I'm just going to hang out. So if you need to go somewhere else, totally feel free to do that. I'm just going to hang out just all day on this. Later on, we're going to cover some trading stuff, and we can talk about good practice and such and such and such. However, again, I don't necessarily think I want to get too involved with the best practices of having to trade, as that's what the AI, we're in the age of AI. It's kind of what the AI should be doing now. I'm a little bit cold. I'm gonna get a scarf. So also wait here, and everyone's sleeping in America, and no one's really watching. I'm just going to play Call of Duty. Hey-o. Nope. Alright, so let's focus. Okay, so that looks like a confirmed 20 points. Question is which one? Hey. Okay, I think I see the structure. Alright, so going back to the AI models. Nope. Hat trick. Oh. Okay, on that round. All right, so that's our next structure. So we've got that and that needs to go in. Two 6 5, 2 7 5. Okay, 2 on 2. All right, so let's do another submission. Before I do so, I'm just going to have a look at which one of these was correct. And as I made mention to, in a way, I'll explain that, I suppose, as we are more familiar with the AI models. In a way, they were all correct because they all said there was consolidation. All right, so model 3. Oops. Model 3. Oh man, I gotta be there. Okay, so model 3, it kind of goes up and down, which through the middle is that consolidation. So it's basically just going sideways. And that's what the market really did. Like from a consolidation aspect, that's what it did. It didn't go nice and neatly up or nice and neatly down, just kind of etched across. So number 3 was right. I think of the models, the most right I would say was number 2, because it dipped, climbed, and now flattening out. So I'd say number 2 was, I would say, the winner here. And then number 1 said it was going to be consolidation. It also can be seen as right, I suppose. My favorite is number 2 right now. But how it kind of dipped, and then if you ignore that, it kind of kept one single level. So in essence, all of these were correct. I'd say my least favorite was model 3, so advanced reasoning. Maybe there's something else that needs to be addressed there. But I'd say model 2 was the winner. And I didn't open up any trades again because these said don't trade on these. So let's submit the next structure. So we're going to hit that play button. The process of dominoes is now being reevaluated. Also make sure that this is still the right one. Yeah, see the consolidation. So yeah, I'm really impressed actually with all of them really. Even this one, even though it's kind of just like quite static, I think it was working with range. So if you had to, don't worry about it, just technical talk, it was correct as well. All right, so let's take those away. Thanks for playing. Let's get the next one, the next round of forecasts out. See, the good thing is that we're working with correct risk management. You'll see here where the mouse is kind of swirling around. I didn't open up a trade there, all right, because the AI model said, not yet, it's going to consolidate. So I got to see the future ahead of time before it obviously happened. Let me get the next match going. Here you go. Which in terms of risk management was really powerful because I didn't lose any money. And as I've said many times before, when you lose money, you've got to make that money back. So it's like twice the effort, or it's the effort and then some to get back to break even. So by not making a loss, it's almost sometimes in some ways better than a winning trade because of what I just made mention to. All right, so let's have a look at the next round. Okay, so these are our 3. I'm liking what I see here on the second one. I just want to see if they all agree or not. Let me just close that sound down. I'm so stoked. unlocked something on Call of Duty I've been waiting for quite some time. So I'm keen to get around to that. Now, let's have a look at what we have here. We've got a gradual move to the upside. Again, we've got kind of a little bit of a valley, and then back to a form of consolidation, which I'm not too excited about. And then down here, a bit more of an active move, where it's suggesting that it's going to go a bit lower and then go a bit up. All right, so I want to take, I'm going to, I'm going to go with Model 3. And how I go with Model 3 is that you'll see that there's 3 buttons over here. Model 1, Model 2, Model 3. Now, by clicking Model 3, what's happening is that the order will go down the pipeline so that I don't have to open up the order myself. Okay, executed successfully. All right, order sent. And then it goes into a queue over here. And what will happen is that when this AI has proven itself, it'll wait to get in and then open up the trade when it's time. So what's important to notice is that it doesn't get in automatically, immediately. It intelligently waits for this particular forecast, because we're going with number 3, to plan itself out, to work itself out, and then open in position on that. So I'm going to leave that there for now. And just kind of keep a loose eye of the turning points coming up. Now, as I mentioned too, this is the 30-second chart, which means there are multiple opportunities a day. And even if I get one wrong, there's plenty of opportunity to bounce back on that. All right, so this could be a turning point over here. So we'll see if it's coming up, then down, and so on and so on. Another thing to notice is that I get to see what's happening in the markets an hour ahead of time. So this, even though it's a 30-second chart, it's still like a human hour of kind of waiting and anticipating and allowing the markets to go out. So the 30-second chart is just power. It gives us the ability to do all the best things that trading is about, but done so more frequently. Still with the MTOPS structure, still with the same platform. So whilst I wait, I'm going to get back to my life and play some more Call of Duty on my phone. Booyakasha. Okay, let's do this. Hey, gorgeous. Do you want to say hi to my live stream? Hey, world.
Sup?
Sup?
How you doing?
Chilling.
I can see you look
Yeah, I'm snug.
rag in a bag. You have a nice walk on the beach?
Yeah, I did. Very
Yeah,
nice
I'm
one.
there.
Yeah, super cool. Cool, yeah.
You going live?
Yeah, I'm live. So let's chat.
Are you coming up to this?
No. Okay, what's happening with the markets? All right, so it looks like it's planning out. There's a bit of there's two agreeances over here. This one's a bit more refined. Yeah, another thing I suppose I need to be watching is that I think these models have got a similar architecture, but that's more technical stuff. So what I'm trying to get to is that and that appears to be the same, but I just got to be careful because if they have the similar architecture, then there will be similarities between those. So I don't necessarily want to get too excited by similarity. I want to be more orientated about the accuracy of the models themselves. And so far, all three have been great. All right, so what have we got here? Looks like another turning point. So let's put in that. It feels good. All right, there we go. Wow, very cool. See, this is, so I've put, as I made a mention to, there is no open trades, as you can see. I've put a delay on the opening of the trades because if I open up, if I had said, okay, get in now, as most traders do, that they're not very patient to get in, and there's a whole conversation around that. So if I got in immediately, you would see that on my environment over here, my trading setup, there will be a pretty big loss happening as the price goes down. But the AI models suggested that it's going to go down first before it moseys back up again. So quite significant if you've been in trading for a while. And I'm not going to get forecasts every single time the price turns. I'm going to get it, I'd say every second, every like 2 highs and lows. So I don't want to have information overload. And I'll wait for the next low to form to get that information next. So just waiting to see where that is. And again, I'm very proud of how elegant the system is. I know it looks basic, but it's basic for a reason. I've left out the noise because I'm not a fan of too many options taking away from the MVP, the most viable product, or the most viable process rather. I want to change it. Alrighty then. I've just made a major upgrade on my arsenal, and I'm very excited to get onto this upgrade. It's been a while. I've been working towards it. Oh my god. Okay, so it's still delayed for the entry. Let's have a look at how much longer. It's another 2 minutes until it opens. Okay, so down it goes. And wow, look at that. Oh my gosh, that's amazing. So I'm in profit and I'm in a buy position. So buy low, sell high. Maybe I'm speaking too soon. But what I did is I asked for the position to wait before getting into that buy position. So it went down, it waited, and now it's in. So I'm obviously going to monitor on whether or not this is going to be a good idea or not. In other words, is this a confirmed turning point, or should I close the buy position and perhaps look at waiting for a confirmed turning point to the upside? I'm going to leave it open because even if it's not the ideal entry, what should happen is that because of my smart engineering, we've got a stop loss in play. All right, so whether the price goes down, no. But again, the models did say that the price was going to go down, both there and both there. So yeah, so stop loss is in play, which means I don't have to babysit the trade and worry about it. Worst case scenarios, I'll take a loss. But as I said, there is tons of opportunities because of the way I've designed the system. A day for me to jump into whatever opportunity I need to. I think you guys get the point. Well, if anyone's watching. Yeah, so that's what I'm waiting for. It's just that confirmed 20 points to see what happens next. One of the best parts of having a system that opens a trade on your behalf is that you don't have to worry about all the psychological power or stress. You can just take away the guys who are trying to steal your flag. Night night, guys. Night night. Give me back my flag. Haha, sleep. Yeah, that was a whitewash. Playing games, making profits. Go up price. How incredible was that? So we waited. So I didn't have to wait. The system waited. Got into that buying position, which is now in profit. You can see that little $20 at the bottom of the screen, which again, I'll talk about risk management and some other points. I didn't have to do anything. The system did it all for me. Okay, I just gave it where the market's doing its thing, and then now I'm in profit. And yes, there is a very clever way in which the position will close, which I don't have to do. I can just set and forget. That position is not my problem anymore. I don't need to close it. I don't need to babysit it. And if you're a trader, this is incredible value, believe me. Nailed it. Good job. Sleep. Oh. I'd say that's a confirmed turning point. It's an update here. All right, so that setup is now done, right? The position's open. It's now doing its thing. It's no longer my problem. Win or lose, it's not on my shoulders. It's up to the AI to get this all right. So I don't necessarily have to sit there charting and worrying and doubting and readjusting and seeing the price go the opposite direction, so having to make provisions for it. It's up to the AI now. It closes on its own intelligently, so, and I won't explain how it works just yet. I'll maybe share that a bit later on. But the job's done, for me at least. Next forecast. Okay, as simple as pressing play. Wait for that to go green. Okay. Victory. Let's have a look at our next options here. So this is still pretty good. I like 3 yet again. That's what's also very nice is it's not identical to 1 and 3. So this is for my own personal record. We haven't got replication. We've got individual thinkers, and that's what's meaningful to me. So this suggests a down and then up, which is quite nice for my previous position that's open. This here is a gradual down, which I'm cool with. And then over here, it's going up again as suggested. My thinking is, should I open up a position or should I just let it cook for a bit? I'm looking to get at least like 5 to 10 trades a day in here. So I don't want to overtrade. But I do want to make profit. I think I'm going to let it cook for a bit. Okay, so sitting back was a good idea. It seems that price is trying to make its way up again. Oh my gosh. Something important to note is that it doesn't matter what the market is doing overall. What matters is that where you get into a trade and where you get out of a trade. So even if it's going in a downtrend and you get in and you catch the bottom of that downtrend and it rides a little bit up and it's still in profit, you're still in profit. So whatever the market's doing is irrelevant. What matters is what you've done with what the market conditions are offering you that matters the most. And again, I don't have to do it anymore. AI does it for me. I can just play Call of Duty. Come here, y'all. Hello. I know you're hiding here somewhere. Bye-bye. Oh. That looks good. As to confirm 20 points. Okay. Oh, that was brutal. What the heck? Right. Ross Winter. Oh! Ross is watching live. Hello, Ross. Let me know if the game sounds gets a little bit much for you. But this is what's going down in the town, right? Let's have a look. Okay, so more consolidation according to Model 3. There he is. Hey, Ross. Oh no! Damn it. Okay, it's consolidation on 2, consolidation on 3 with a bit of up. Probably not the best idea to open up a trade just yet, but let's wait. Oh, no. I'll be everything in a second, Rice. We're going to be hanging out, just chilling. As soon as the match is over, this is what keeps me company, because I've been hard at work for way too long, and I deserve some chill time. So henceforth, a little bit of fun and games. Pew. Yeah, turn up, turn up, turn up, turn up, turn up. Yeah, the cortisol is great. Keeps me feeling alive. Okay, so I'm going to be running the AI models. Oh, wrong keyboard. All right, right. So whilst I've got you, my friend, let me explain some of what's going on here. Where do we begin? Let's begin at the beginning. What really gets me down is the psychological requirements of trading. So even if you've got a winning trade, you're only as good as your last trade. And for me, it's quite a heavy weight to carry, because you're almost always on performance review, and there's so much to it. So what I don't like about the markets is that you can kind of get wrecked a bit and still have to be okay. No, let me say it differently. So you can be right, but right at the wrong time. So it's all these psychological elements to keeping yourself alive in this field, and the suffering is silence. Like, you can't really tell your friends about this. You know, like, you can't pick up the phone every 20 minutes and say, hey mom, I've had another bad trade, because eventually your mom's going to not answer the phone anymore. And obviously one's mom is probably the most compassionate person to a trader or to themselves on the planet. So it's just kind of a metaphor. So the heavy lifting on the back end of this project has been to try and automate as many sticky points as possible. That includes opening up a trade in MetaTrader so that the weight of the trade doesn't fall on the trader themselves, which is super significant, especially for the marathon that is trading. So that's just one element, but I'm jumping, I guess, to the end. To dial it back a bit, what I've done is that, unlike the other charting programs where the psychology of, or the addiction of the dopamine of watching the casino play happens, so like it moves up, moves down, that kind of stuff, I've not had the platform update in real time, because on a lower frame like this, it can creates like this jittery reactive feeling that a lot of the markets offer. And instead, what I've called on is to have a delayed candle structure addition. So in other words, this is a 30-second delay to live market conditions. It takes the 1 second, aggregates it, and once that information is available for the timestamp, that then gets visualized. But it's not like this up and down, what's going to happen next, where's the candle going to form, where's the wick going to form kind of stuff. So it's also helping the trader psychology and just not being as impulsive and so on. Another thing about having the trades open up almost in like a fixed format is that the position sizing isn't necessarily dynamic. And in the past, I have mentioned about having different size trades for different size setups. Although right now, I just think there's just so much work that goes into trading that you don't need additional thinking that goes up and on top of it. So I've set a fixed position size for every single trade that goes in, as well as an automatic stop loss as soon as any trade is open, so that even if things go not according to plan, then their account is always protected. So their account is never at risk. You can go out to dinner, you can leave the house to go get groceries done, or whatever the case may be, and you're going to come back, your account is going to be there. All right. What might happen is you take a paper cut loss on a trade, but that's manageable. And as I made mention to, there's so many opportunities to rectify that. But I think the key point is that this over here, this MetaTrader 5 setup, is mostly for display, just to kind of keep record. What I can do, and I've got the code ready for it, is put these metrics directly into the user interface, so that this doesn't need to be looked at all. But just because I'm in the beta testing process, I want to keep it live. Yeah, all right. So and that's for me a major value add, especially it's one-click convenience. So I give a click onto one of these buttons, which corresponds with whichever the forecast seems most sensible at the time. And then that will go through the pipeline, bang, 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 correct position size, consistent position size so there's no bias, as well as stop loss in case the market didn't go according to plan, or and also the way it closes is dynamic as well. So it doesn't work on switching up oscillator. It doesn't work on the kind of stuff that typical strategies use to have the semi-automated way to close a trade. Well, let me take it a step back. So when it comes to trading, a big heavy weight is, should I close now for the profit that I'm in, or should I let the position ride? if I let the position rise, will I lose the profit that I already have, and so on. So there's this constant like inner dialogue that makes you feel like you're fixated to what's happening on the charts. And for these reasons, it's just another thorn in one side to move forward with trading, because there's so much consideration, analysis, paralysis, and build up to opening a trade in the first place, that once you've got the trade open, there's another set of skills of being patient and disciplined and waiting for the things to kind of to work out. And that's by having the system automate the position opening and also closing it intelligently, that's no longer a barrier for the trader themselves. So just from those mentioned points alone, having AI to be there as a partner is absolutely, it's so welcomed in my life in particular, because I'm not going to become a farmer or an accountant or a lawyer. Like, this is my game. So the better this game is for me, the happier I am. And so just having the burdens alleviated out of my psyche means that I can be a happier person. So honestly, whilst everyone's kind of doom and gloom because of the news, I'm so glad to be alive at this time, because none of this was possible in the past. And none of this, I mean, even I've been using ChatGPT for the last 2 or 3 years. I'm so glad to be moving away from ChatGPT. My wife uses ChatGPT now, which is nice for her to make better postcards and whatever else. But for me, I'm a serious person who needs serious results, and this has been quite a serious thing for me. So I need to have something that really can partner with me at my level, and thankfully the AI game outside of ChatGPT has really leveled up. So we've got some strong models to be there alongside the creation journey. I just want to clarify something as well. In the past, I said everyone should be at least interested in AI and trying to keep close to its progress and stuff. I got to say that the way I've used it for coding in particular has taught me that you have to have a obsession with solving problems to go the distance when it comes to coding and coding along AI. So even though all this opportunity is available, and now having these tools still means that there's a certain personality trait that needs to prevail, and that is the absolute desire to solve problems. And today is the first day. I mean, I've been working through the weekends and that kind of stuff. Today is the first day I'm just allowing myself to sit back and enjoy what's been created already, perfect or imperfect, and just allow the models to make their forecasts, to open up a trade from one click of a button, the trades managed, the trades in line with all of what's required to succeed in trading. And yeah, so for the day, for today and tomorrow, I'm just going to hang back and just chill. So I suppose whilst alone, I could have Call of Duty play, and it's no problemo. But what I don't want is to kind of have gunshots unnecessarily play in the background. So perhaps I should mute the sound, which I'll do now. But yeah, bro, feel free to ask any questions and such, or to set your charts up. I mean, no pressure, but I am here. There it goes up again. So again, I could have freaked out because I was watching the numbers go against me. So it hit the going towards red, but the AI said it's going to go up. And so it's just a bit of patience. Whether or not it breaks even, or for a minus $30 of what could have been a positive $350 trade, like it's all good because I didn't put in that mental sweat equity, well, not even equity, that mental sweat to open up a trade. It was all handled by the AI and the system process, to be clear. Today is the first day I'm going to go all in on testing. Basically, there's been multiple sets of different hurdles, including learning new products and such. So when you're creating, it's quite engaging because you're planning and executing and thinking of different ways to approach that problem. But when integrating with something else, it's been a marathon of paper cuts. So what I'm talking about is it's taken over a week, which I think in human years is like nothing. But when you're a coder who wants results on the live markets and watching things move every day and wanting to be a part of it, it feels like dog years. So it's been like a week in human time, but what feels like 6 months in dog years, or in my time. And that's just to talk to kind of the hurdles that I've been having to work around as it's learning the new interface, the way it's done, how it's integrated with the current stuff, adjusting all of the paths so that it can work elsewhere. So just to kind of give you a heads up, like I've been working with being able to make the code portable, and so I can install it in other computers. So the last 8 days, as much as I've wanted to have this on the market and trading and such, it's been me having to learn this product and having to get through all of the modifications that's required for it to be adaptable and relevant to the project. So no, I haven't been testing as much as I wanted to. And that's a really long way to answer a simple question. And the simple question is, has it been tested? The testing's happening now. So this is kind of warts and all, bearing everything out into the public eye, whilst it should just kind of be me testing. But I just thought I'd kind of been out of the scene for 2 years, 3 years, just in the coding environment. So I thought I would come out and just put a pause to all of that for a little while and just test in the live conditions, where it'd be perfect, where it'd make mistakes, where it's be clueless, or where it's freaking awesome and it changes the game. It's all going to be kind of displayed here. And I'm going to be running the stream tomorrow as well, and we'll see how much comes out from what needs to be worked on, but maybe even next week as well, because I just kind of need a break from all the problem solving and just kind of like just take a pause to where things are right now. And if things go well and the feedback is kind of positive as to how potentially simple or not it is to set up, then the week after that, I'd say we're in May. So from June, I'll start installing it onto other computers, which is exciting for you, Maras. Hey, let's go. But yeah, but you can tune in just to see how things are going every day. Like it doesn't have to be a partial update in terms of how things are once a month. And it's good just to kind of see it in operation, even for myself. Like there's so much I still want to do, obviously, but then there's time. What I want right now is just to polish the MVP. It's the most viable product. Like for example, right now, the AI model said that there was going to be, or the previous forecast said it was going to go down, bounce, and start moving up. And so far, so good, dude. Like it's pretty much done exactly that. Now, whether or not from a time aspect it was perfectly on time, that's kind of something to work towards. But yeah, instead of having like 2 or 3 trades open on just a segment alone and just seeing the frustration and paper cut close and closing too early or waiting like, oh no, I was right overall, I wish I had those 2 trades open because then I could make up for the loss. Like all of that kind of stuff I've absolutely avoided by seeing what the models wanted to tell me, which was that there was consolidation back here and it was right. And then it was going to move down and sweep back up again, which is currently what we are going through. And yeah, so we're just waiting to see if there is going to be some form of resistance happening here or if it's going to continue down. And why that's significant is because I'm just looking for the relevant turning points to make sure that it all comes together. Yeah, you're right, dude. It's damn good to get a break and see the wood from the trees and just be back in the world of trading a bit. Like I've just been seeing codes and code and an error and this and that and develop and that works, and then I cry because I'll cry from relief. I've actually been crying of late just because of the relief of things working and I'm running and and to get to this point you have no idea the work that goes behind it, and because it's just a simple screen up front, it's just, it doesn't look like much because it's kind of standard stuff, but it's every turn and whatever on the back end, which has really tested me like I've never thought anything could on that level. And so yeah, you're right, dude. It's good to just kind of take a break and just go with it. So yeah, dude, if all goes well, I think, the setup of this version before all of the adjustments, or maybe with some further adjustments, we'll see, can start being rolled out. And the thing for me is that the turning points, like I know where turning points are and where they aren't. What I need is just to have that spherical connection of it anchoring in. Like I can see that this was a confirmed turning point. And the other thing is that I suppose this can take a little bit of practice, is where, with regards to the full cycle, is this happening? Because I don't want there to be like 1, 2, 3, 4, 5 turning points in a small period of time, whereas this is actually like one kind of quadrant. But I think it's a bit of like riding a bike, and just a little bit of like, okay, well that looks good, that doesn't look good, which means that I thought for me it's super simple, but I think repetition is the mother of skill, and just doing it a number of times, be like, all right, cool. So 111 is probably going to be a turning point 4, and then a build to turning point 5. So now where we are right now in relation to the full cycle, and that's why each one of these bars are labeled, every single bar that comes through, the highs are labeled at the top and then the lows are labeled at the bottom, is in relation to the market structure. So as you can see it building over here, it's going from a 4 to a 5. And if you add the spherical tool, you got to get more of a detailed description of how it's going to do that. And that's all I need really. But I know that the MTOPS way has got quadrants, and it's got the last 4 turning points, and it's got these GAN tools and the probability boxes and the cube roots and all the rest of it. But man, I don't really want everyone to have to go through that setup every time just on the input. And then the middle bit, what position size, where's the stop loss, all that kind of stuff. Do I enter now? Do I wait? Because the market's not always ready to be traded. So then there's all of that, which I don't really want to do either anymore. I'm kind of bored of that, waiting and patience and patience and patience. And then the psychological weight of having the open position going. I was like, I don't really want difficulty, to be honest, anymore. I just want streamline. So this is solving a lot of problems, even though it looks simple by design and so forth. You just got to know where the highs and lows are formed, and then it pretty much does the rest for us. So I'm pretty keen on this. I'm really keen. As far as the forecast is gone, I'd say the most impressive one was option 1 over here. So basically what it did was it hung around at the top, so it built, then it hung around at the top, kind of went down a little such and such, and then it had that drop and then picked itself up. And now it's doing like these weak little squiggles across. So the structure over here was pretty much what happened over there. So I'm happy with this model. And again, as we go, I'm going to remember all right, we've really got a number of good trades coming from number 1. 2's got some work to do, so I know how to get that work done because I understand each architecture. And then over here, this is a complete bozo. What a waste of time. And then we can refine. Or, I'm always keeping up with the latest news of diffusion and all that stuff that's going on in the AI world. So for me, it's not difficult to make the adjustments of the architecture to be modernized with what's going on. So even if these ones are kind of a 70% strike rate, over the months and years, I can adjust them to the latest available reinforcement learning, absolute zero human inputs kind of stuff if need be, and just keep up with the time. So all of that hard work is done. All of that's behind now. The education, the dredge work, the doubts out the way, the building of a platform, the adjusting it to our specific requirements, getting the forecast on the front end, having the trade managed and closed and stop loss and delayed entry in accordance to the prediction. That's all done. So it's just refining, optimizing, refining from here on. And that feels great. And then once the refining is well and polished, then it's onto scalability, which I don't want to rush into right now because then it becomes difficult to control. But when things progressively get even further automated, which is obviously always going to be the objective, then it's just plug and play. And you can just change the what it's looking at. So go from Bitcoin to gold or whatever, and just let it run. So yeah, I'm pretty excited, dude. I feel like this is a turning point for me, and it's well welcomed. So just in case you weren't here for the setup process, basically I just press this little button here, it's going to do its pipeline thinking in the back end. When it goes green, I go to the next one in the process. So now I'll just go to this button, wait for this to kind of go green. It takes a little longer because it's got all of the, it's got to think, three models are running their predictions. And then here is what we've got. So we've got some downtrend happening at the bottom one, which I think is cool. The second one says we're going to consolidate and then go down. So it's another, so we've got two cells here, the two of them saying the market's going to go down, which is fine. And then over here, it suggests it's going to go flat and then down. So I'm going to open up a sell position. When I say I'm going to allow the market to open up a sell position. I think I'm going to go with option 3. So all I do, Russ, are you watching? If you're not watching, watch now. Let's press number 3 because it coincides with the third forecast. It goes green after it's been executed, order sent. So from the front end, it goes down the process, blah, 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 all the code and so forth. And here it is on the back end. It's got the order ID. It says how long it's going to wait until it opens. So it's going to wait 10 minutes before it opens. And then this is then the stop loss is already preset. The position size is preset. It also agrees that it's a sell order. So basically, that's all I have to do. Let's just press that button right there. And then it goes through on the back end, and it waits and it waits and it waits, and it has like a countdown timer until it opens. So, and that's it, dude. So eventually, like right now, as I said, I press the one button, then I press the next button, and then I press the one that I want to go with. So that's I can link those together as I have many other processes behind the scenes, so that it's I don't know, dude. Like it just happens instead of waiting or click. Right now it's beta testing and controls, but like that, for example, can all be done hands-free. So it decides when to open. All right. So as you can tell, they all agrees that it's going to go down. So how does it decide to open? Well, it looks at the direction of the trade, of the trend. So first, phase 1, it looks at looks at direction. Then phase 2 is that it looks at the opportune entries and exits, and then it applies it to its logic so that the trade construction or the trade management follows that. So said differently, of these 3, I liked the third one the best. So that's why I opened on the third. And now it looks at the direction of the trade. It looks at the opportune entry. It looks at the opportune exit. And then it applies it to its logic. Hands-free. So the psychological weight is off, right? And again, because of its accuracy, I'm in profit over here. All right, so my buy is over there. It said it's going to come back up again. It's now coming back up. Now, as I mentioned to you, we're in a sell position that's going to open next because you're trading in trend. And as you can see, this is still the buy position closing on the previous forecast at a profit. All right, I'm not closing this. It'll automatically close. So so I don't have to manage this trade. It's managed intelligently by the AI's best guess of what the market needs to do next, and it's been right so far. Okay, but the important point I want to repeat is that it doesn't automatically open as soon as I send the order through. It waits for the best time, according to the forecast, to open, either buy or sell, and then closes at the best time as well, according to the forecast. And again, I'm in profit because of that. All right. If I was myself just trading, I may have gone long like there and watch it kind of go against my position, potentially closing it, then watching it go down, potentially closing it, and then going, all right, cool, it must be going downtrend. So now I'm opening up a short right now just so I can get into a trade, and I can lie to myself like it's going to be okay. Just like get into the trade now and just manage your stop loss. Don't worry about seeing like the profit. It doesn't really matter, whatever the case is. And then being in the open trade going, oh shit, I'm tired of seeing the loss. I don't want to have like this whole position closed, and that's a big dent in my progress, and all of that internal noise is now offset to the intelligent thing. And again, it's not conceptual. The results are right here on the screen. So it decided the price was going to go up. I'm in profit, and it's delayed on its forecast of the price going down. Okay, so I chose to open up on 3, but these ones over here said it's going to go up a little bit before it goes down. So that will happen in the next 20 minutes according to this one. Yes, the answer is yes. Which is great, isn't it? Okay, I missed your question. So where the detail on the forecast comes in model 2, what's causing that? This bottom one looks like it's like a squiggle, but has more confidence from say one that looks more highly defined. Yeah, ask your question again, bro. I don't really understand it. And again, like, see where it's getting red and potentially turning around over here, and my profits, like, this is just kind of manageable numbers. We can scale this up to thousands of dollars. But for now, like, I don't want things to go wrong. I've got to kind of make those thousands of dollars back. So, so $30 is just indicative of profit or loss. So over here, I would typically see like, okay, cool, this looks like a turning point. Let me close this position. I don't do it. I strictly allow the trade management to close the position. If it's an opportune profit, if it's less than opportune, or if it's at a slight loss, whatever the case would be, I don't get involved anymore. And again, I would have potentially closed over there, but as you can tell, now there's a green candle that follows that and going up. But it doesn't matter if I was right or not. I've left it completely up to the AI as a practice. That's because I no longer want the stress of having the open position weight on my shoulders. And whilst this one is still looking to close, the sell position is getting closer and closer to automatically opening. $131 seconds is about in 2 minutes time, the sell position will open. All right, so we closed there for a mild profit, about $20. And as I made mention to, I could tell that this was going to be the turning point. And without having to close it myself, it closed itself at near the opportune turning point. How insane is that? Oh, I see your question. So the detail of these two, okay, so Model 3 has got reinforcement learning attached to it. But with reinforcement learning, it's put out a range of numbers. How sweet, eh? How I'm so glad you're seeing this in real time, because I can send photographs, I can make videos and stuff, but you never know, like, what the hell. Like, this is live streaming. This, like, you saw, it's closed. Like, the position's closed. I didn't close it on my own, and it got that point over there, right? So the entry, maybe it should have taken a little longer, but this is the markets. The fact I don't have to do it myself, and it caught the right spot, and I'm in profit, and I get to open up another 5 to 10 trades in the day. Like, it's so awesome. Going back to your question, so this is advanced reasoning with reinforcement learning. So these, the first two are more granular and more defined because of it doesn't have reinforcement learning on it. Whereas this one does. So there's more averaging, and therefore it's smoother. But in the way that again, dude, I didn't open up this, I didn't use the MetaTrader 5 myself to open up this next trade. It was a delayed entry based off of this forecast, and now we've got a new position that's open. That's just happening right now. How sweet is that? And if it doesn't necessarily go down immediately, that's totally cool, because we saw over here that these models are suggesting that it's going to go up a little bit longer, but eventually go down. So going back to the question about smoothness and granularity, what matters is that we trade and trend. Okay, so whether we get in over here or over there, or we get in over here, the fact is that these three models suggest, and you can see over here by the price going down, that we're going to have a sell move that forms next. So we can get opportune, like right now, for example, we basically caught the top. I'm so glad this is a live stream, because I've been dancing myself, you know what I mean? Like, you get that imposter syndrome sometimes when you've had a marathon of freaking errors that you've overcome day after day, week after week, night after night. And now it's like you seeing it in real life. Closed for profit, opened at the opportune, and now it's doing its thing. All right, so maybe it continues going up. Maybe I got excited too early. But so far, so damn good. But because the close, as you can tell, they all suggest a sell position. The entry point, if it's there, or there, it's not necessarily as important as it used to be back in the day, because the overall direction is down. And when you trade and trend, which is what we're looking for over here, you're profitable. And as long as you're profitable, you can succeed in the world of trading. So what I'm trying to say is that the granularity of the models aren't as big as a deal as my ego initially focused them to be, because it's trading in trend with the trade managed and all that kind of stuff. That is the ultimate benefit. And as long as we don't hit the stop loss, which is nice and loose, we're good. So this green candle, it's not a threat to me. I know that the markets go up. I know the markets go down. It's a zigzag action. The fact that we closed, and I'm going to say this a million times more, it doesn't matter what the market does. It's what matters to the trader's account, what they do at the timing of the market. So the fact that the position was open over here, and then the position was closed over there, it doesn't matter what happened in between there, really. It closed for a profit. Didn't hit a stop loss, and that's what matters. And again, that's where all these many opportunities a day will present themselves to be able to have us do that time and time again. And yeah, I'm loving this spherical tool because I can just plant this down, connected to the price that's already happened, see what it's trying to do next, and there's no freak out involved. I don't have to close the trade, I don't have to do anything. I just chill. All right, so just ask. Okay, is WR win rate? Okay, so right, just break those questions down again and one at a time, but without the abbreviations, so I can give a meaningful answer. I need a strepsils. My voice is getting like hoarse. Oh. Okay, what's the risk reward? Good question. So yeah, we're in beta testing, so I've just started. So I haven't got historical records just yet, but the risk reward equals dynamic, which is freaking clever. So if you look over here, so said differently, when opening up the tool, you can either set it 0.5, or this is 1:1, 1:2, 1:3, or your own one according to the MTOPS environment. But to be honest, most of the time I was happy with 1:1. So basically, if the entry is over here, and I'll put the stop loss over there, the distance between stop loss and the distance to target is 1:1. And I was okay with that. But what happened is that what if price didn't stop at 1:1? What if it was a big run, and actually I could have got a 1:3? So $1,000 could have turned into $3,000, but it raged up, and I closed for $1,000 where I could have got $3,000. That's painful because I put the work in, I got it right, and yet I didn't get to experience the full benefit of that big move. So, as you can tell here, Mr. Russ, there is no set turning take profit that's open. And by the way, remember we said it was going to go down? According to here, it's going down now, back into profit, right? See how I didn't freak out at all that it was going up? Just for my mental whatever, I put I put on the spherical tool just to ensure that everything was still cool. But yeah, AI is right again. Anyway, so the risk reward used to be fixed. Now it's dynamic. So it works not on a set target. The target's open. It's going to close in line with this forecast over here. So said differently, if there is a major move down, we're not going to close early because we hit a target. the AI is going to foresee that something's coming up, and how big that something is, because sometimes that something is significant. Instead of taking a handful of profits, we're going to be closing in at a bucket full of profits. So we don't have to miss the big moves anymore. The big moves, because it's dynamic take profit, will be attained. So in terms of stop loss, there's always going to be a stop loss set immediately. Is that one of your questions? Oh, and it doesn't dynamically set a stop loss. It's a fixed stop loss. The dynamic, because the entry is dynamic and the take profit is dynamic. So the stop loss is there just to protect the account. But it's not too tight that it will get wicked, because so often I would have a stop loss that is set. The price will go to that stop loss, hit it, and turn and go in the direction which I said it would. So it's a loose stop loss. The objective is to protect the account, not to protect the position per se, because the entry is smart and dynamic, and the exit is smart and dynamic. So the fixed stop loss is just merely to make sure that the account doesn't get wrecked. But it's not to say that the stop loss is, say for example, if we have a loss, it doesn't mean that the stop loss got hit. It just means that the time of close for the take profit wasn't, what's the word I'm looking for? Maybe spot on, for lack of a better description. So basically, when it closes, let's say if we put in a $300 position, or $250 for easier math, instead of having a loss of $250, maybe it closes not at the, maybe it just misses the mark, and the markets kind of just happen or whatever for that one position, because we have many positions in parallel. Then that position will close at maybe like minus $80 or minus something to that effect, like maybe minus $50. So you have a minus $50 on the history performance and not a minus 250. And that's a major difference, especially when you're scaling up in numbers. So the stop loss is a certain number of dollars away. And because I work with dollars and not pips and volumes and metrics and all these weird prop firm conversions, it's a certain amount of dollars away from entry. And it's set in line with that with the entry. So where the entry is created, that's the point, obviously, where is how far the stop loss is set from the entry. So it's got nice wiggle room, and still giving it space to fall back in line if there is like a small blimp that the AI didn't pick up or something to that effect. I mean, it is live market conditions, so theoretically anything can happen, especially on these 30-second very fast time frames. Like I'm on the lowest setting here, 1 minute, and I've always wanted this. I've always wanted to trade on the 1 minute, because the other ones are just so long and boring and cumbersome, and and I'm so glad to see this all moving. Okay, so we're looking for a turning point 5. I think turning point 5 is in. Let me make record of that. And that's how simple it is. You just update those bits of information. I'm not going to get the next forecast just yet. I'd rather do it every 2 turning points. But yeah, that's it, dude. That's the extent of the difficulty, really. The initial market setup it takes a little bit longer, but thereafter it's just putting in 2 numbers after the turning points have been made. Then it eventually can become a 1-step process. I'm still going through the controls and just looking for anything weird that might happen, but it can be just one major play button that's hit, everything goes through and then everything pops up, and then once we're happy with that, cool, we'll go with that. And then that's for now. And then later on in the year, there's going to be automated. I was going to start with the automated market setup already, but instead I decided to do some streaming and hangouts instead, and get it ready so I can put it on other computers. But yeah, later on in this year, I'm going to be working on machine learning that's going to pick up where the highs and the lows are according to the MTOPS market structure process and what I look for. So that then automates the inputs, and that's and we're getting closer and closer to it just being a fully automated process, and that's where it gets fun. And if markets are low volume, I guess to protect your risk due to take profits not getting hit, or turning points, take profit not getting hit, you simply don't trade. Yeah, you don't have to open up every trade. And I've avoided some trades already until now because the AI said that there was going to be consolidation. And I don't want to have like paper cut losses and that kind of stuff. So I literally just avoided a number of trades, or a couple of trades, a few trades to avoid that. But when I see that we've got, they are all individual AI models saying that we've got it's a good idea to open up a sell, then it's going to be worthwhile for me to act on it. And whether or not it goes down immediately or it goes up a little bit and then down thereafter, I don't have to worry about it. As in, if your risk reward is 1:1 and it doesn't quite reach 1, then you have 1 on the table. Dude, you got to ask me, what the... Bro, what are you saying? What do you mean then you have 1 on the table? You'll have the dynamic, you'll have the amount of profit that the trade will dynamically close at in line with the prediction. So it won't be a full... it doesn't work on risk-reward ratio anymore. It's more dynamic. It works with the AI's forecast. It doesn't work on a fixed take profits. So it won't limit itself. It won't be limited to 1:1. And if it closes less than 1:1, let's say 1:0.5 or 1:0.8, then that is the performance for that individual trade. Yeah, and we get the forecast of what's happening over the next hour. So it doesn't have to be too reactive. Like I can go pick up the kids from school and all that kind of stuff. Hey, Solomon! Cool. Solomon asks, why do traders promote their strategies and make videos about them if they spend so much time developing a strategy that works and makes money for them? Solomon, I want to take the negativity out of your question because it sounds quite cynical. But if you're speaking about me in particular, I can answer that. If you're speaking about people broad brush across the internet, I think there's various reasons. So from across the board, I think the markets are tough going. And the more money you have, the more money you've got to make money from. So having various forms of income makes paying bills and keeping a sustainable life market related, like the up and coming people sort of thing. So I'm not talking about firms who've been around since the 50s and Wall Street and the London Stock Exchange, like offices and stuff. I'm talking about guys who are trying to change their lives and get out of their environments that are not necessarily serving for them, because they don't want to go to a day job all the time and they don't want to this and that and the next thing. So by educating others who are at a lesser point than a person is, so if a person like myself, okay, let's just keep it general for now. If a YouTuber has gone through all of this work, so learning how to buy and sell, learning different exchanges, learning, and let's say, for example, this person's over here. There's all of this information that is still what this person needs to learn, because you can't avoid it, sort of thing. Unless you got something like myself that is creating AI to automate the process. But this person doesn't have what this person has. So they need to kind of climb up the experience and the ranks, and having mentorship and having someone who knows what they're doing and someone who's put in the hard yards and all that kind of stuff. It's important to not be selfish with it. And that's the thing that I've realized about going back to my personal question, is that if I'm sharing the knowledge that I've acquired, and it's 8 years in the making, if I'm sharing the knowledge that I acquire with kind of like my brothers and sisters and stuff, like other people who are trying to get ahead in this game, because I've learned all of the ways how to lose money, and I've been scammed, all that kind of stuff, and I can share that advice. What happens is that the law of reciprocity is, by uplifting others, I get uplifted as well. So that's kind of the reasons why I do it. Like the more you share, it's a contribution setup. And then, say for example, I'm chatting to Ross about risk reward, and then an idea might spark to mind, going, well, I got to make sure that I've got to have a dynamic take profit that's going to close. And let's say, for example, a risk 1 is to 5 in case of one of those crazy moves that you want to definitely not miss out on, where it just kind of runs up and then turns and dumps back down. Like you want to get the full run. So maybe my sharing with Ross sparks off that trigger, going, let me add this to your system. So, I mean, you can't just be like isolated and keep everything to yourself, but that's not how abundant works. That's scarcity, that's lack, that's that kind of stuff. So I'm speaking for myself in that environment. For the other guys, I don't know. I think the other guys, there's different motives. Maybe they're still trying to figure out the markets, and by making money from others who just don't have the time to figure out the markets, and then they just kind of run off with their money. Like, I don't know, like I can't speak for everyone, but when you come from a good place and you want to uplift other people, then it's better to share. To keep everything to yourself, it's almost like, I want to say blasphemous. It's or selfish. But I mean, like, I don't know, different strokes for different folks. So I'm kind of, I like to uplift other people, and that's the reason why I share. Cool, Ross. It says, so it may close at a lower reward than your risk. It may close at a lower reward than your risk. Yeah. Yeah, that's right. That's right. Yeah. So Ross is also, he touched on a good point there. It's about human connection. Trust me, like I've been here in the world of just kind of coding and all the dredge work for now years, and it gets very isolating, and it can get a bit depressing, because sure, I've got my family, I've got my wife and all the rest of it, but I don't have like a boardroom. I don't have a water cooler or like the company cafeteria where I can just offload some steam and just make some jokes with my friends or some work friends, whatever, and then get back to it. It's just like go, go, go. It's like problem solve, 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 advance, develop, and it's isolating, and it's great that I get to work from home and have those freedoms, but human connection is still a need, dude. So that's I'm speaking for myself. I'm very much against people who are just trying to push a kind of a nonsensical strategy down someone's throat by upselling them through this marketing process and email marketing. Click here to get a free PDF and then sign on to my free webinar, and then let's get together and then bring this all as one, or whatever the case is, and then that becomes like a VIP structure and then one-on-one mentoring, and you can spend $10,000 for a lunch with the person. Like, I don't believe in that rubbish. I believe in the in upliftment and bringing value to others, and you can only really do that when things are like raw. When it's live market conditions. Like with the stream, you can't kind of BS anyone, because the price data that I'm getting is exactly the price data that someone else is getting on their computer. And so it's not like, you're going to get this brand new BMW car, which is going to be fantastic and customized to your requirements in 3 months' time. And meanwhile, like, when you get the car, it might be like a scammed kind of secondhand car. Like, there's no ambiguity. There's no he said, she said. There's no room for lying when it comes to this, because I can't BS you, because you can look at the price, and this is the price has been recorded for decades in advance. So this is as truthful as it can be, to be live, get the results live, operate in the now moment, and once you have all of that, I think the conversation goes from, is this person trying to upsell me through this sales network, or are they intrinsically adding value and uplifting other people? And I like to think of myself as the latter. And I'm not trying to say that the markets are easy. I used to think that, but there's just such a heavy psychological element to the markets that can really weigh down on a person. So I hope that answers the question. Okay, Ross says, if the win rate is high enough, then it's all good from a statistical perspective, which based on MTOPS is high. Absolutely. It's not about ego anymore. It's about offsetting the anguish as a primary benefit. And there will be losses. The market's the market. There can be a news event that all of the markets lose their mind towards, like, I don't know, whatever it is. Powell from the Fed said that we're getting rid of dollars and Bitcoin's a new currency. Like, there's going to be that element of those crazy events that kind of happen every so often, but you can't bank on it. You can't make a strategy of that. So there is going to be crazy kind of chaos in the markets, sometimes, but it's a numbers game. So losses are to be expected. But profit is something that a lot of traders can't acquire, and they can't acquire it often enough times. So even if you've got, let's say, for example, between 5 and 10 successful trades in a day, but the profit taking isn't optimal. Let's say you're getting like, I don't know, $100 profit per trade. That's between $500 and $1,000 a trade off of one account, off of one market, before scalability. So win rate definitely trumps risk reward, because risk reward is limiting and also discouraging, because a risk reward, if you miss your 1:1 ratio, if you miss your target just by a few pips, just by a few dollars, like it gets close to the target but doesn't hit the target and it goes the other direction and it hits stop loss instead, then you've lost an entire position size instead of getting a partial profit. And that, for me, that's way more sensible than working with risk rewards. And again, like risk reward, for me, it's another outdated financial blunder of the industry. It's just like it's not involving technology. It's not involving the dynamic movements of intelligent trade management. It's kind of like just old school financial thinking, like financial trading markets, which is something I've been kind of progressively pushing against all of this time. Sweet, Ross. Enjoy your day, bro. Yeah, I'll be streaming today, tomorrow as well, and then maybe next week. We'll see. Have a good one, brother. I'll chat to you soon. I'll be streaming until 5 o'clock this afternoon, our time. And then, yeah, around about mid-morning from tomorrow, and until close of business as well. Well, and I've got a private coaching session in the afternoon. So, yeah, I'd say mid-morning to mid-afternoon in our time zone, bro. Maybe. Yeah. I don't see why not. Cool. Yeah, I'll post the results. I'll send it to the to Telegram. Sneaky little shit. Okay, we've got two conflicting ideas here. There seems to be up first and then a gradual kind of slow decline. Same thing over here, I guess. Bit more movement towards the latter bit, which I'm not too interested in as a trade. Oh. Here it says it's going to do a little hump and then climb. So this is where I don't necessarily think it's a good idea to open up a new trade on this particular one. And again, that's why it's so nice to have the 30-second trade charts, because it keeps offering new opportunities. So I can just avoid this opportunity for now. What the hell? Yep, like a boss. Okay, so no trade to open just yet. I'm gonna sit and chill. And go to the toilet. Oops. I think I'm going to go with option 1 to open up that trade. Cool. Successfully sent. Ah! Okay, let's reset it up. Most valuable player, of course. All right, so okay, 281. I'm going to put as a 9. Let's see if there's a turning point. 10. Nope, not yet. Get rid of that. Start the process. Oh no. Ah. From behind. Okay, next order has been sent. Ah! Gotcha. Too slow. Okay, one more round of this, or maybe a couple more rounds of this, and then we're gonna go pick up the kids. So I've got 2 trades in the queue at the moment. They're all waiting to come through. One's going to take about 3 minutes. The other's going to take about 8 minutes. One's a sell. Okay, the sell's coming in. Yeah. So the recent one is a sell. I think the one prior to that might be a buy. I'll have to see if I still feel that should be open when it happens. Getcha. Ah, come on! Jesus. Okay, so it looks like a sell order wants to kick off. How much longer until we can get to that? Okay, so another 3 minutes. Okay, I'm gonna go pick up the kids. Let the AI opens its orders. If you have any questions, use the chatbot below. As you can tell, I'm just hanging out on the stream, keeping myself occupied with a bit of mobile games. But ultimately, you have to trade. And we're on the 30-second chart, so there are a lot of incoming information every 30 seconds, basically. That's what the 30 seconds stands for. So if you want to know whether to buy or sell or what to work from in terms of the AI predictions, then let's chat. Nice. Yes. See the shorts positions open, as you saw, loading up. There's a sell position waiting to come through. And that's exactly what happened. All right, so we're in the profit. Look at where it opened as well. That's good. It opened just before the drop. Yes, AI, keep it up. Very good. There's that buy order. I was wondering where it was in the queue. Now I see it. Well, I'm really impressed that the sell order opened at exactly the right time it should have opened. I think this buy order worked on a previous market structure setup, which I don't think is necessarily the way the market may or may not turn out. But I am keeping record. So over here, where it says magic numbers, this is associated to the different models. So if, for example, if 1 isn't performing too well, there's going to be a record of the performance of 1. And this way I can keep track on what needs refining. Okay, I'm just looking for any new confirmed turning points since the last. Yeah, I think a turning point 10.1 is in. So what I do now is I just restructure. So I'm going to get this done, and I'm going to go after this to go grab some lunch. I see the error. I think it's from my side that one of the entry points wasn't correct. Okay, so that's why I gave an incorrect reading. So it wasn't the AI's fault, it was mine, which is preferable because I would rather be wrong than the AI, because the AI is going to be taking over from me in the future. I'm just wondering if I should close this position at a loss because it was my mistake. If I should leave it up to the AI to close it. It's conflicting. Okay, so this one says consolidation. This one says consolidation. This one says slight down. Okay. Well, I think I'll lean into the consolidation timing of the close here. I mean, if this goes into profit, I think I'll close it because it was me that, as I made mention to, I think I made the error of opening. One of the details I went in wasn't correct. So I think the forecast that came out was based on the incorrect details. Some options are just to leave it or to close it. And based on the consolidation, I think I'm just going to allow the market to bounce around a bit. And once it pops its head into profit, I'll close it then. I don't really want to have unnecessary losses on my performance history. Let's see, there we go. I would have closed it for $100 and it starts creeping up towards 22. So it's probably best just to allow my fate to be sealed in the AI's hands. But I did say that when it goes into profit, I'll close it off. And these are the kind of the reasons why I want AI to manage my trades, or why I've chosen AI to manage my trades, is because it's just too much responsibility all the time to be reactive and trying to outsmart the market and just all of the things. It's a lot of pressure. So I'm really glad that I don't have to take on that pressure anymore. Okay, there we go, it's in profit. And I'm going to take my $25, $30. There it is. Okay. And allow the original forecast to play out. All right, so I closed for profit, and then I've got profit building on the next one. I just want to see if I've got I don't think I've got any trades lined up. And I sold at the top, by the way. I love when that happens. It's one of the beautiful joys of life. Okay, so that's just skipping. I'm going to reload this this EA. I guess I can change it from test EA to live EA. Still saying it's ordering received, but I've submitted all the orders. Profit, baby, profit. Okay, so what do we got here? Very nice. It feels good to be on the winning side of the market. Spent a lot of time on the wrong side of it. It feels good to be on the right side now. Right now, I mean, the numbers are underwhelming, $60 profit and stuff, but that amplifies. Once proof of concept has been threaded in, position sizes can be as big as you need them to be because the proof of concept's done. But I'm obviously keeping it conservative now because if anything bombs out, I don't necessarily want to have to work back any dumb mistakes or areas where I should have been more conservative whilst in testing. So this is all testing right now. But again, but that could quite easily be $400, $4,000 eventually. But I don't know. Maybe it's better just to kind of stack different hedges instead of having one big $4,000 plus or minus because at one time with one trade. For now, at least. Maybe next year it'll be different. But profit is profit. And I've won 3 out of 4 trades. Decent. That's good. Based off the AI system, by the way. This looks like it just out of interest an expanding triangle. So I'm really glad I didn't close position for loss because it did come up. See how it came and just I closed at the right time before it dropped off again. So it's being very kind to me. Very unlikely trade, but I guess when the markets respect you and you respect the markets, there's some form of camaraderie ship. Alright, so we're going to have a turning point. I guess 3 could happen here. I mean 2. Yeah, let's put turning point 2 right there. And 3 up here. We live right by an airport and it's so awesome just to see all the private planes, not like the commercial planes. It's only private planes. But almost every day there's like a biplane or a Cessna or something to that effect just taking off right by our kids' school. So it's like really wonderful to see all these private planes flying around. It's nice. Man, I love what I've created here. So it seems the market's going to bounce around a little bit, some disharmonic vibes happening with the next prediction. So I'm not going to open anything just yet. So I'm trying to let the two current positions play themselves out. Okay, so next market prediction. Model 1 says downtrend. Model 2 says consolidating. Model 3 says consolidating as well. I'm going to go with Model 1. Hi, Tony. Yeah, I think it really is. So, let me just exit my game. It's been going for, you can hear by my voice, it's been going for a long time. So, let's chat to what we see over here. Okay. Hooey. Just gonna drink some water quick. It's been a long day. The big challenge, for me at least, when it comes to trading, is having to manage the trade. So I've been busy at work building the pipeline so that the weight of opening a trade is no longer crushing me. Because there's a lot that goes into trading. There's try and find the software. Oh, here we go. Freedom, Freeform, whatever. Yeah, I don't know. I'll leave it right in the middle, maybe. So there's quite a bit that goes into trading. Firstly, it's the pre-work, then the trade opening itself, and then the trade management. So this pre-work part, this is the charting, analyzing, and following the rules, I guess, but like its own form of discipline in terms of patience, waiting for the right opportunity, waiting to get into that opportunity, and so forth. So a lot of people get lost in this first bit over here because it's work. It's setting up charts, it's being patient, it's not being impulsive, it's waiting for the market to do its thing, and so on. Then there's the trade itself. And the work that the trade requires is position sizing, stop loss setting, risk reward management or take profit setting, which in itself is an entire different discipline. And it's also very trade specific. Then there's the stress, or the pain rather, of managing a trade. And that is not closing before sets take profit. So often people will be like, see $150 on a $200 trade that they've, or $200 position, and they want to close on that because profit is profit, but they kick themselves because 20 minutes later, they hold that position open would have gone to $350. So it's all of the mental discipline and management of having an open trade. So that's really tough. And then also, I suppose, how to deal with the loss. And also silly mistakes. I'll put that there as well. For example, that not opening a trade with a stop loss. And then when that happens, you can run into big account related drama. Because if you don't have a stop loss set, then it eats into what is meant to be this big sum of money, and one bad trade without a stop loss can take it down to zero. I've been there before. It's a horrible experience. So what I've been working with over here is trying to solve a stack of problems all at once. Putting in realizing and working with trading for so long that it's not just about charting. So charting is one piece of the puzzle. It's that charting is putting the correct turning points down, finding the real highs and lows without the bleed off and it actually not being the high or the low, using the work of the mystical GAN to help us with that, and following the right set of rules, not over trading, not trading every turn, etc., etc., and correct, just correct disciplines. So there's a lot of work that goes into just this first part of the process. And it doesn't have to be a lot of work, but a lot of people spend a lot of time here. And the reason why there's a lot of fixation on here, the downfall rather, of there being a lot of fixation of what's happening over here, is that these two will then suffer from the amount of energy expended here. So what I mean by that is trades are super easy to open. You can get into a position real quick. You can just pick up your phone, go to your app, open up a trade, and it's open. But it shouldn't be that easy. There's actually quite a lot to it. In terms of position sizing, if your position sizes are too big and you lose three trades that you just didn't see because you didn't read the market correctly that day or whatever, to bounce back from those losses, it's a lot harder than people think. So position sizing is very important, as it also plays into the realistic possibility of a person having the markets provide them a salary, because if their position sizes are too small, if it goes on to the other side of that equation, then they don't have enough to live with, right? So that's where the greed steps in, and so position sizing isn't always the same because emotions change. Impatience, revenge trading, trying to bounce back from a loss, that kind of stuff, it's very dangerous for a lot of traders because they can't keep a grip on themselves. Stop loss setting can get very tight, because if, for example, someone takes a loss, they know that their stop loss should be set further away from the entry, but they can't necessarily always do that, as in reality, if your stop loss sets your target. So for example, in this area over here, if your stop loss sets your target, then the closer your stop loss is, then the closer your target will be as well. So if you're having maybe not a perfect day, or if you've taken a frustrating loss, here's a frustrating loss that I'm speaking of. So the AI forecasted a move down, and it got in at the exact inverse of what should have happened. So it opened up a short there, and then as this came back down, the stop loss got hit. So this is a very frustrating loss for any trader to deal with. Now, the bounce back after that means, well, if I open up a position as such, then the distance between the stop loss and the entry point is the distance between where the target's going to be if you want a 1:1 ratio. So the closer I move the stop loss, the closer the target is, the closer I can close up a position for profit. Now, what can happen, for example, right now, is that the price, instead of going up to your target, can then go down and take the stop loss up because it's quite close. It's like you've put it just behind where that recent price action is, for example. It's quite close. It can come down, take you out of the position, and then do whatever it wants thereafter. So that's what I'm trying to say by this, the stop loss setting being quite a threat to a trading experience if not managed correctly. And then there's the risk reward ratio. As we saw, like I defaulted to using a 1:1, and then the take profit as well, as again, the closer your stop loss is, the closer the take profit is. But if there is a funny move to the wrong direction, then your position is completely closed. All that money's gone, and it may or may not go back up again. But there's so much risk to actually opening up a trade in itself. So one is convenience, two is where to set your stop loss, because you might still start disciplined initially, but maybe that changes, and then all of a sudden it doesn't necessarily work out for you. So there's that. So that's the other thing that I haven't loved about trading. And then next in the order over here is actually managing a trade. It's about breathing through the emotions when a trade isn't working out, where you really expected for the market to go down, but instead it's going up. And when you hold the weight of the trade onto your shoulders, it's hard not to take it personally, because every passing second, not every passing minute or 10 minutes or every passing hour, more realistically, if you're a day trader, almost what it feels like every passing second, the position that you have opened is on your consciousness. It's in your psyche. You're aware of it, and it's quite a hopeless profession, because there's nothing you could do about the trade except for allow it to do one or two things: either go to stop loss or get your take profit. So that's super strong in the pain matrix of what it's like to day trade, as well as the other things that come on board, as I mentioned earlier: closing a trade before it should have been closed, managing your mental state whilst you got an open position when their money has consequence. And if you lose $500, like, it's a crappy feeling, right? Like that kind of stuff, that kind of level I'm talking about. And then also how to deal with like a bad trade day. Like if you've got 3 significant losses, and all of the energy and focus that it takes to get that back. Because it's seemingly so easy, so very easy to make a loss with trading. but what it feels like eternity, or like real difficulty to make profits. It feels like it's way longer and a way more difficult. And that's before all of the technical rubbish that happens. For example, sometimes is maybe the internet router goes down, or you open up a position with the wrong amount of numbers, or you put the decimal point in the wrong place, and the stop loss doesn't actually get set at where it should have been. So there is so much pain in trading, not just taking a loss. It's about the full process that's problematic and painful. So what I've been working on over here is something that is said to resolve a lot of those issues. And so yeah, let's walk through the process. So basically, I need to get the information of the market through to the AI. And how I do so is by feeding it where the highs and the lows of the market are located. So next in line, I got to put in where MTOPS is 20.6. So it's 185. Okay. I think that's all I have for now because I don't see a confirmed turning point. As 20.7, I don't believe has formed just quite as of yet. Unless it has. And if that's the case, I suppose I should include it, right? So let's do that now. I'm a little bit concerned about this little flat area over here. So sometimes it's difficult to ascertain where the highs and the lows are when it is flat like that. But I mean, let's move forward anyway. All right, so where I have put in what should be the market structure, I mean, it is possible that 20.7 is actually up here. But it's quite late in the cycle. So for the purpose of getting another prediction out, I'm going to leave it as it is. I submit the market structure through to the AI models. So it goes through the databases and the data pipeline. Once this button goes green, I go to submit this through the through 3 AI models that I'm testing. I've got about 9 AI models that need testing, but I'm just going to start with 3 because otherwise it's just information overload. Okay, so that's green again, which means the process is finished. And then here are my options. So we're getting over here that there is a continuation. So according to model 2 of price action going up. Here is interesting. It suggests that it's going to kind of taper off, but form like a double top. And the first one suggests a drop and then a drop thereafter. The good news is that they're not exactly the same. And if they were exactly the same, that means there would not really be much purpose to having them. To be quite frank, I don't necessarily think this is the correct market structure because these in particular don't necessarily correspond too well with what we're seeing over here. So what I'm going to do instead is I want to put 20.7 over there. And then just take 20.8 away for 20.8 away for now. So let's get a fresh prediction. And we've got some agreements between the models that there's going to be some movement to the upside. All right. So of these models, which one should we go with? I'm just going to have a look over here. I've got some record of the models that I've been using. The second one, even though it seems the most convincing, it's kind of losing to the third and the first. And the third and the first have equal amounts of wins. So I'm going to go with the first. So now going back to solving these problems, all I've really had to do is identify the highs and the lows, put that information in, press a button, get the forecast of where we think things are going to go to next. And now that I have had a look at the three forecasts, I've made my decision as I'm beta testing the product to go with option 1. So all I do with the front end is I click on option 1, the order is sent. Not only will the order be opened for me on my behalf, but it doesn't automatically open immediately. First, it has a look at where's the trend going. So in this instance, it'll be buy low, sell high. Then it says when is the best time to get in. It marks that and then puts that into the trade. So it manages the trade on my behalf. And then it says where's the best place to get out. So we got similar ideas but slightly off. Model 1 suggests it's better to get out earlier. Model 2 says somewhere in the middle to get out. And Model 3 says let's ride this thing out until quite a while from now. And that's how the positions get closed. They don't necessarily stay open until they hit target. They don't stay open until better days. They close in line with the AI's version of the best guess of what the market's going to do next. So this is in line with best case scenario, if you ask me. So we don't necessarily need to take on the pain of the worst parts of trading, which is trading itself. I personally enjoy charting. I think charting is a divine gift from the universe. It's to do with universal laws and so forth and so on, everything else mentioned in the other videos. But the trading is such a pain in the ass. Knowing when to open, waiting when to open, waiting for the kill zone to be out. There's just like, the trading part sucks. It can either be incredible because the money is coming in, or there's a lot of challenge where that one loss sours your day. So handling trading I've got a few simple buttons that works with the AI understanding of live market conditions on the 30-second chart. And even though the 30-second chart seems like it's super fast, it actually is quite granular. It takes a while to move across. So with these forecasts, we're getting an hour ahead of time of what the market wants to see next. And then, we just sit back and let the AI manage a trade on our behalf. So not only is it forecasting, but we got the rest of the system automated as well. And that is the true benefit of having a semi-automated system. I'm going to progress it towards the most automated it can be and take away the worst parts of trading, but still enjoy the process of trading. So I'm going to take a break from my voice. I'm just going to leave the stream. The stream's been going up for about 5 hours so far. And yeah, a lot of talking has been done. So I'm just going to kind of take a break on that now and wait for the next turning point to come in, or for the position to open, which it isn't already. It's like it waits for the opportune time, and then it gets in on prediction as to where the best place for it to get in would be. All right, guys, the stream's been going for 6 hours. I think I want to give it another 20 minutes, and then I'm going to call it for today. If you have any questions, send them through to me in the chat. I'm happy to answer them. All right, so as I close off this 6-hour live stream for the day, I've learned some things. I think the live stream tomorrow will be more New York time friendly, as today has been quite toiling to be streaming since hours of when America has been asleep. I think the markets are happiest when New York open bell is about to fire up. So in terms of time zones, I'm going to be more America's friendly. So tomorrow afternoon we'll jump onto the charts, and then in the morning I'll do development, and then in the afternoon will be streaming. So development, streaming, development, streaming. What else did I learn today? This is awesome. As simple as it is, it's really the next era of what intelligent, responsible, smart trading with AI should look like. And the user interface we can make pretty and change colors and all the rest of it. It's just the process of just clicking one or two buttons and having the markets kind of be told to you as to what's going to happen next, and then the trades open in line with that, with the right direction, with the right position sizing, having a stop loss automatically set up, and the intelligent way in which the trades close is something I've worked 8 years towards indirectly. And now that it's here, I'm getting to see how the new era is only going to get better and better. So that's it for today's live stream, 6 hours long. My voice is a bit hoarse. We've got some one-on-one private mentoring now. Let's see you tomorrow. If you have any questions, feel free to ask them in the live chat.